What is going on YouTube? It's Sankey and we are back with another one. Alright guys, for this drop I'm going to hit you up with a couple of plays, but before I get the show on the road, if you'd like to help out the channel by hitting that like button, and if you're new and you're looking to improve your future financially using the stock market, join the movement by hitting that subscribe. So before we head over to the plays, guys, it's been one of those rocky days in the market today. It's not only you, my portfolio's also got the beat down from the markets. As I say, we are not yet out of deep waters when it comes to this market volatility. But hopefully by now I've given you guys that perspective, that understanding of the markets to be able to better weather this storm. And it's important that you guys stay the course with our quality plays, because those are the plays that are going to rebound strong, and when you turn your backs to the market, that's when they're going to start to make their climb. A lot of the plays I've been putting you guys on, you are sitting on plays with solid fundamentals and a good future ahead of them. Right now there's a lot of noise, a lot of panic in the market, a lot of rotation of funds from certain sectors to other sectors as well. I'll talk to you guys about later on in the video, so that will improve your understanding of what is going on in the markets. Now, given the volatility, I know a lot of you guys are looking at your portfolios, looking at ways that you can rejig your portfolios, improve them. So in this drop, I'm coming at you with a couple of plays. I call them stabilizers. They act as the glue for your portfolios. Now, along our journey, I have been giving you guys these types of plays from time to time. And those of you who've been adding them, you guys have seen that these are assets to your portfolios. But I want to use this as an opportunity to put them back on all of your radars so you guys can grab your shares. Now, I'd like you guys to have at least 10% of your portfolios in these types of plays, because as I say, it will help balance out your portfolios moving forward. All right, guys, you know what time it is. Let's get ready for the first one. So the first play I've got for you, that's Starbucks, ticker symbol SUBX. Now today, guys, we are rocking with triple digit plays. I want you guys to start adding some of these S&P 500, these Dow plays to your portfolios moving forward, because as I say, they're going to be stabilizers through any periods of market volatility. Now this is a play that's going to benefit as we move into economic reopening. Their retail outlets opening up, socializing is going to increase. That's going to drive up their revenues. But the street is saying revenues are going to increase 20%, earnings are going to improve moving forward, and that is ultimately going to increase that stock price. So you're going to grab your position in this one before they continue their climb. You guys know this is not like our growth plays. You're not going to see spikes up in that stock price. This is going to be a steady grower for your portfolios, but that's not to be overlooked. That is still an asset to your portfolios. As I say, you guys need these stabilization plays. It's this kind of play, guys, that we say preserves your wealth. So definitely want all of you guys to grab your position in this one. The next play I've got for you, that's Goldman Sachs Group, ticker symbol GS. You guys know I like my financial plays. I've been trying to get you guys into them for months now. I've been talking to you guys about Wells Fargo, and you guys have seen how that one's been climbing up. This is just another play I'd like you guys to add to the portfolio, and there's still a lot more room for them to climb. Earnings was announced just the other day, and it was an absolute crush by this play, firing on all cylinders. Now, as we move into economic reopening, we're going to see more business activity, and they are going to use financial providers like a Goldman Sachs Group that's going to drive up their revenues. We also know that soon interest rates will increase. Again, that's going to benefit Goldman Sachs. So this is a play that's a hedge against those interest rate rises that we're going to see moving forward. So that's why I say when you want to diversify your portfolios, the key market you want to look into is also the financials as well. Also, the Fed have stated that they're going to lift restrictions on dividends and share buybacks as well. And I've spoken to you guys just the other day about the positive things that can happen to that stock price once they start doing share buybacks. I'm expecting a lot of these financial firms to start initiating these share buybacks, increasing that stock price even further. Now you guys want to go through your portfolios and see if you've got any exposure to the financial sector. And if you're running thin on plays in the financial sector, grab yourself some GS. Next up, that's Apple. Now this play really does need no introduction. This is one of the most innovative plays on the planet, one of the most strongest brands attached to them. And there's still a lot more room to climb from where they're at right now. This is one of those plays, as I say, they're a stabilizer for your portfolio. They will allow you to flatten out the volatility in the markets when we come to days like today. So I want you guys grabbing your position in this one if you haven't already done so. Now we know we recently saw that rotation of funds out of the tech sector, out of plays like Apple, but we're seeing it flow back into plays like Apple now, and I expect them to continue their climb as we move through the year. This is a play that's been consolidating for months now, so it's about time we see that stock price break back into the 40s and continue their climb. This is a play I expect to end the year at that $160 mark, so there's good upside to be made on that current stock price. Now this is the kind of play that you invest in and you hold. You don't need to check this one every day, you just let them do their thing. You can catch them on the pullback to increase your position. No stop limits are needed on this one. It's not like the growth plays, we're gonna see more volatility in that stock price. So again, these are the kind of plays that I say they allow you to preserve your wealth in the stock market. So those are the plays I've got for you. Now, all of these plays, they have a lot more potential to be unleashed as we move through the year. So those of you who are looking to take your portfolios to the next level, add some structure, consider these plays in the next trading session or next time you catch a slight pullback in their prices. Let's talk about how we can level up as investors. Now, I'm going to talk to you about overreaction as it relates to the stock market. This is where you're going to see plays becoming excessively overbought or oversold. Now, given today's trading, I'm talking about being oversold, where a lot of plays were wrapped up in today. This is because the investors, they're not always thinking rationally and they're not always pricing in all the publicly available information for that play. Instead, they're letting emotional bias start to get involved. You guys know I always say when it comes to investing decisions, you guys never want to let emotions start getting involved, whether that's fear, greed, FOMO, you always want to put that to the side. And a case in point is Lovesac. We know they crushed their earnings just the other day, and on that day we saw that stock price come down at its max. It was down 10%. Now just fast forward the next trading session, this one is comfortably in the green in a day that is very testing for most growth plays that were down on the day. As a matter of fact, this is one of the toughest days for the growth plays since the second week of March. So as you guys can see, it's almost as if it's not every day the stock market makes sense in its movements. So I don't want you guys getting caught up in that day-to-day volatility in the market. As I always say, you got to know what you're invested in, and when you're sitting on quality, like the plays that I put you guys on, you have nothing to worry about in these markets. So if you've been rocking with the channel, you know what time it is. Now this question comes from one of my patrons. Says, I'm currently down 15% on plug and fuel cell and down 12% on CLNE. I don't want to take losses because I think all three will rebound nicely, but what's the difference between holding the bag and holding through the storm? So let's dive into this one. Now there's certain things you're looking out for in plays that you're going to weather the storm and come out on top. That plays that you run the risk of holding the bag on do not have. So the first up is business momentum. You want to see consistency in catalysts and partnerships, acquisitions that they're doing to move their business along. Second up is strong financials. So you want to see the historic financials, they're beating estimates, they've got good guidance numbers going forward, they've got good balance sheets attached to that as well. Third is the industry they're operating in is going to continue to grow. This is going to give them a long runway of continual years of growth. The last is related to that, is they want to have a strong position within that industry or a unique position. They're just doing things differently to the competition. Now, out of the plays that you mentioned, CLNE is one of those plays that ticks off all of those boxes. So I expect after you weathered the storm, that play to continue its climb up to that $20 mark. Now, when it comes to fuel cell and plug, what you guys must know is they're lacking in the financials department. So in a weaker market, that's why you're seeing that downwards volatility in those stocks, and they can continue falling down because they don't have the strong financials yet. Even though prospects for them are good in the future, as I say, they're lacking on the financials. However, you said you're down about 15% on those plays. So an option for you is to pivot from those plays or a portion of your holding into other plays that are trading at support that have a good potential to bounce up. So as I say to you guys, you can use this as an opportunity to not only catch these plays on the cheap, but pivot out of certain other plays. So that wraps things up. If you'd like to help out the channel, do hit the like button. And if you're new, join the movement by hitting that subscribe. Also, check out a link down below to the Patreon, where you can join our team of investors over the Discord and connect with like-minded individuals. Now, as we close out the week, you guys know I'll be there with you every step of the way to ensure you guys are able to navigate these markets. So I'll catch you in the next one.